Hello traders, Gary Wagner here, just afternoon in Honolulu, 5 o'clock in New York. It is Tuesday, 19th day of December, 2017, and this is the Daily Report for gold and silver. The House passes tax reform legislation and the markets react in a very muted manner as traders and market participants attempt to get a handle on how this new legislation will affect them as well as the economy. Gold traded back and forth between positive and negative, closing down about 70 cents at $12.6480. Silver down about 2 cents at $6.18, and a fractionally lower U.S. dollar, 93.04, down 0.2%. Now, the equities market as a whole were lower, but modestly lower. 24,754 closing price on the Dow. S&P at 2681, down 8 points, and the NASDAQ down 30 at 6964. However, it was Bitcoin that had tremendous price moves, with the Chicago Mercantile Exchange futures contract losing about $1,660, about a $5 decline in the CBOE, and now they are roughly $110 away from each other in terms of pricing, 17,550, 17,440. Gold prices are absolutely struggling to complete the day with positive gains, which would mean 5 consecutive uptick days. As of this moment, though, we do have gold trading lower, off by about 30 cents, trading at $12.6530. The overall characteristics of the market today have been a muted, narrow, and defined trading range. This all occurring as the House passed its tax cuts, and now we are awaiting the Senate to confirm or pass the bill. Traders, as well as market participants, are now looking at this legislation really for the first time to understand the intricacies of this legislation and how it will affect themselves, their family, as well as their businesses. On a technical basis, yesterday's strong upside move took gold pricing to just above a retracement level that we defined in between 1264 and 1265. That is based on Fibonacci retracement. It is a 61.8% retracement of the extended $163 rally from July to September. Currently, we are seeing resistance coming in just at the 200-day moving average, which currently resides at roughly 1268. That is this red line here. And the next level above that would be derived from the 50-day moving average, and that is this yellow line, which currently resides at 1277. Yesterday, we did recommend the initiation of long positions in gold, silver if you trade that. Gold is slightly above our entry point, and our stops are still sitting just below the lows of these bars here, which are roughly at 1243. My recommendation is to maintain our current long position and to maintain our current stop level. Silver is trading in a very similar manner to that of gold, in that last week we came to these extreme lows, and from there we had a key reversal or a V pivot in which we saw market prices move higher. We have seen a continuation throughout the end of last week as well as the beginning of this week. And even though silver is trading off by about 2 cents today, currently fixed at 16.18, it is a green candle, meaning that it is trading above the open of today. And we do have a higher high as well as a higher low than we have seen in the preceding trading days after witnessing the key reversal from last week. It gives it more credibility and credence, and it certainly confirms the assumption that we made that we saw a key reversal in both gold and silver on Tuesday and Wednesday of last week. And traders, lastly, I do want to take a look at Bitcoin futures. First, we are looking at the CBOE, and they trade the single Bitcoin futures contracts, trading under dramatic pressure, down almost 8%, down 1,475, currently fixed at $17,580 per Bitcoin. Now, we finally have some data in there, enough to start to put in some technical studies. The first one that I have put in is a Fibonacci retracement going from the lows first day of trading when we opened at the CBOE up to the highs that it has reached as a futures contract, just above 20,000, and then we bring in our different levels, 23, 38, 50, and 61. What we can see is this most recent move has been a little bit over a 50% retracement of the lows to the highs in the market, and therefore on a technical basis we would look for some sort of support if the market continues to drop somewhere around 17,200. When asked how much further could we see this market decline, I am still under the assumption that we are in a major bull run for the cryptocurrency Bitcoin, that we are also absolutely deeply entrenched in a bubble, and at some point we will see this market give up a major portion of the net gains seen. But I also believe, like the tech bubble, that once that bubble has completed its downside move, it will return to basic rally mode, and buying the dip mentality will serve us well at that point. The fact that we had a muted reaction today to the legislation that was passed is twofold. One, traders and market participants are attempting to glean information so they understand the net effect it will have on them, their families, their jobs, and their businesses. And secondly, we are getting closer and closer to the Christmas holiday, and as such, we will see volume diminish over the next couple of days. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.